What is up, everybody? How is everyone doing? Happy Sunday. Welcome to what could possibly be one of the most chaotic, fun, terrible, wonderful trading weeks in recent memory. Before we really get into the swing of things, how is sound, video, everything look good, sound good? Chat, everybody? Are we coming through loud and clear? I sure hope so. Andrew says we're good, so I'm going to just go with the guy who matters in my corner for the time being. But looks like everyone in the chat is saying we are good as well. So thank you all for joining us. Welcome to Market Kickoff with Nick4ATick. I am Nick. Thank you guys for tuning in on your Sunday evening to TopstepTV. We're going to be going through a light planning session of what we could possibly see in the upcoming week. If you've been living under a rock or you maybe are not living in the United States, this is about as big of a week as it gets. Every 4 years, we have our presidential election. If you've been trading, I'm sure you're well aware. If you've been on Twitter this weekend, I'm sure you are absolutely aware because it's the only posts I even see for the last 24, 48 hours is political stuff. So it's hard to kind of look at this week and have a plan that you're not necessarily prepared to just throw out with the baby and the bathwater. No pun intended, as I'm still waiting on pins and needles for my little one to come into this world. It could be tonight, could be in another week. We'll see. We're in that last home stretch here. So if you see me just disappear from fast markets, or you don't see me on tomorrow, Wednesday or Thursday of this week, or even Thursday or Tuesday night with Coach Dakota, you kind of know why. It's likely I'm at the hospital with my wife waiting for the birth of my daughter. So of course it might be a little poetic if it were to happen on Tuesday night, just being election night and all the other chaos that probably will come with this trading week. If it's this week, so be it. But we'll have to see how things turn out. This could, like I said, be a super exciting, really great, fun trading week, I think, for all of us. Or it could be the type of week that loses a lot of people money. So if you're not prepared for some volatility, if you like slow range bound action, I mean, you could get it in the early part of this week as we wait for Tuesday and we get a reaction to the election. And then maybe we start waiting and balancing in that new range as we wait for whatever the hell Jerome Powell is going to do on Thursday. Because with the election this week or occurring on Tuesday, FOMC has been moved from its regularly scheduled programming on Wednesday at 1 p.m. Central to Thursday. And we'll talk a little bit more about that. I don't exactly know what the Fed's going to do. It's hard with some of the data we've been seeing to get too in the weeds of, how they've been reacting, but the bond market's ready to call their bluff is what it looks like. And I'm very curious to get Jack's perspective tomorrow on fast markets too, because the bond traders, have been selling off to the point and bidding and yields are back up to the point where it makes me think that maybe some of the smarter traders, at least we like to think maybe they're smarter traders, may know a little more or maybe alluding to something that may happen, or the Fed may not be cutting as much in the short term as they had jawboned their way into saying in the last FOMC, and I think caught some of us off guard. It caught me a little off guard with the 25 basis point cut versus the 50 that we actually got. So I don't know. It's going to be an insane week. I guess that is the absolute easiest thing to say. And I'm going out on a limb and saying, tomorrow could be a bit of a snooze as everyone's kind of heading to the polls in the next 48 hours. The market may just kind of be waiting, digesting new information. I'm sure we're going to get a reaction in the crude, in the oil markets when we open here in 10 minutes. I would not be shocked to see a more outside move in oil this week. But most likely the market could just be waiting till we get some clarity into Tuesday evening, which, also makes sense why the Topstep risk team is limiting the trading activity of some of the live accounts on election night. I think it just may be some craziness. There could be some volatility. I think, the market may be pricing in one thing, and then if something else happens, you could get a violent move to the downside or back to the upside. We don't know. As polling comes in, who knows at this point what's going to happen. I think we just gotta kind of wait and see. So this is a week where, like I said, if you don't like volatility, maybe pack your bags and wait for Thanksgiving week, because regardless of how volatile or how maybe lack of a move we could get with the two big events this week, the move next week also matters. And then the kind of reaction as we get into the latter half of November into Thanksgiving, it could create trading opportunities, and the volatility could be here to stay if we do get a larger move that isn't just us continuing to march to the north side to make a new all-time high. If we get it to the downside, I'd expect some bidirectional type action going forward, at least until volume slows down towards the holidays. But we'll have to wait and see. Before we jump into my planning, and I know you guys can already see, I already put my weekly pivot on there. That was my knee-jerk reaction today, and we'll talk about why I'm placing it there. But how was everyone's week last week? How did everyone trade? What's been going on? How's everyone doing? And as always, as we're going through this, throw questions into the chat. If there's stuff you guys want me to talk about, go over, throughout this evening, I'm happy to answer them as we kind of are moving through and discussing this further. Actually, I want to try something here. Why does that look really small on my charts? Is that better? Does that look a little better? I'm trying to zoom in here. It looks a little better for me if I did that. I know we don't care as much about the DOM as I'm doing this. That's why I'm kind of asking. I kind of wanted to zoom in because I think sometimes the numbers get a little lost coming through to YouTube. So hopefully zoom more. Okay. I will enhance. All right. Well, I'm not going to spend time screwing with OBS while I'm doing this. I'll fix that for next Sunday. But point taken, the numbers will get larger for you guys. I want to make sure it's coming through loud and clear because I know I have a very large screen over here. You guys can't see it, but the numbers look relatively small to me with my old eyes, I guess. So I will fix that so that you guys can see clearly these numbers a little better. But anyway, okay, let's dive in. I don't know about you guys last week, but I had some fun trading this. I love when we get a little more outside moves, and it's not just very tight range bound action. And, the market does move a little bit. And unfortunately, if you're not good at shorting, you need to get good at range trading, I would say, because when the volatility comes or you get these wider kind of, aggressive moves to the downside, they can be tough to trade because I think a lot of us get so used to just buying the dip. Sorry, need some water. Buying the dip, that sometimes when we knife down like we did a couple of the sessions this week, it's very hard to kind of figure out where that bottom, may occur. And, buying the dip doesn't necessarily work. But what it gave us, when you look at last week's volume profile, was basically a double distribution. We started the week kind of balancing in that old ES range that we had been in. For the last few weeks, we kind of had been ping-ponging around. I think we talked about this last Sunday because we were in that exact range for the early part of this week. But basically, we're just balancing within a 100-point range on ES for the last month or so. And I'm glad to say at least we left that range for the time being. I mean, we could change this tonight. We could, get some movement back to the upside, fall back into that balance range, maybe go tag my week pivot and kind of make a decision there on which direction we may go. But I was very thankful to kind of leave that balance range. You weren't seeing a ton of initiation from buyers, despite all of the single stock call buying and everything that happened last week with all of the, the call buying and the Mag 7 that was leading into their earnings. You didn't really get an impressive show by any of them. They were all pretty lackluster. Even the good earnings, they were priced to such perfection that it's just, you got not necessarily a negative reaction, but you got a lackluster reaction. And naturally you had maybe some profit taking, maybe just some closing of the positions. Then you had the fear of God maybe put into the semis with what's going on with potentially SMCI. And they're going to report earnings this week too. So maybe we'll see how cooked those books actually are. If you're talking to, EY leaving them and then maybe having to find a new auditor and somebody to actually look at those financials going forward. We'll see as that story continues to evolve. I'm very curious to listen to that earnings call as well and just see if they even do address the biggest elephant in the room. But obviously that affected the semis, and we do have a couple other big names this week in that sector reporting as well. So once Mag 7 kind of reported last week, you got that lackluster reaction, and we started to sell off a little bit as we, kind of came down into Halloween night, and we just continued to sell off from there. So that reaction I take seriously. Like I said, a little bit of possibly, hey, the Mag 7 had pretty much run up, 30 to 40% almost, depending on, which version of that you kind of look at. So there could naturally have just been, hey, some profit taking coming in and you needed a reason to sell. So naturally a little bit of fear with maybe 10% of NVIDIA's revenue being from a company that is possibly fraudulent in some capacity may have just given people a reason to sell us down a little bit. We didn't go that far in the grand scheme of things, but we did have, like I said, that double distribution here. And where we ended up at the end of the week is back into this old balance range from hell that we were in, that I think was driving a number of us insane for weeks, when we were basically just ping-ponging between like 730s and I think it was 785 was the old number where I think I was even referencing and saying that is where you need to see buyers really build volume above if we want to potentially go make a run to a new all-time high. And I think we were talking about all this a few weeks ago, maybe over a month ago, whatever it was. So now we're back in that range. And if you're wondering why my pivot's a little higher to start this week, it's kind of that same logic that goes back a few weeks here, where until I see buyers now with some force and with some volume pushing us back above 5,800, it's hard for me to get too bullish given, everything that's going on this week. Until I get that reaction, I don't really want to be the first person to long it down here with the volatility events that are taking place. Now, I say this on ES. On NQ, it looks a little better, if that makes any sense, where if we can continue to not, let's say, go retest the lows of last week, there's a good chance we could rotate all the way back up to this other side of the balance range that NQ is actually in. But on ES, it's a little more precarious. And in fact, I think ES looked like it was leading a little more last week than NQ. Usually we see maybe one or the other is kind of leading us. But the NQ, ES seemed to be leading us down a little bit towards the latter half of last week. And it's going to be a little bit more in my purview of kind of what I'm watching to see, and maybe even take more trades in ES this week rather than NQ, just given the volatility that's possible. It's a good week just historically, given, the election, that you may want to size down. This is a week you may want to use micros if you weren't before. There's nothing wrong with building into your normal size if you're a mini trader historically. There's nothing wrong with still, building to a larger micro position, but you could take a smaller paper cut than your normal stop out if you're trying to build in and you really see it start to move against you. It's a good week to do that, especially if you're going to be trading NQ, just given the volatility that's possible on Tuesday and, obviously Wednesday with the aftermath of the election. If we even do get the results, who knows? And then going into Thursday with FOMC. So when looking at last week, like I said, why is Nick putting his pivot, back up in the 30s? And in fact, you could even stretch this probably to 35, 36, kind of this lower wick that we saw towards the first time we tried to sell down in the early part of last week. But the logic is this little high volume edge here was intriguing to me, just kind of looking back, and that also coinciding with this other, distribution. When we made this trip to go make a new all-time high and go break 5,900s, this was kind of that area of consolidation that we had before we made that new all-time high, before we kind of burst through and hit 5,900s. So I would expect price to potentially return here and another decision to be made in kind of that, let's call it the 5830s to 5835s. So mine's a box. Like, I still kind of use this rather than throwing out like a single, level to you guys. It's still going to be a range on ES, and this would be a range if we're kind of chopping up and down in for a 5-minute candle, 10 minutes, 15 minutes, 30 minutes, whatever in ES, and we haven't made a decision. That's probably an area that once we've still kind of consolidated in that 30 spot for a little bit, I'm comfortable probably taking a trade one side or the other based on which side I feel like is having momentum. If I'm watching the DOM, if I'm watching time and sales, and I start to see buyers really start to initiate here and they're getting absorbed, then maybe I take a short. And maybe then I know where my stop is because I'm seeing maybe iceberging something coming in, but it gives me confidence to kind of use this as something I could lean into potentially for a rotation back down towards 5,800. So that is kind of my logic of the pivot there. And we just opened a little gap down in ES. Actually gap down. I think we closed Friday right around 57, 58. So we're about 12 points off of that on ES to start. So yeah, nice little, if you didn't love last week's gap to start Sunday, you got another one here. Who doesn't love that to start your trading week? So we'll watch and see what happens there. But as I said, if we were to reject off of that 30s to 35 spot, I would expect us to rotate back towards last week's low, in this other aspect of balance down here, all the way into the 30s. And if you were to lose that, you're going down towards, 5700s down to the 5680s, kind of this lower volume node here. And then it gets a little weird. That's kind of where you'd see a lot of balance, and we saw a lot of chop, but at least for the early part of this week, I'd expect buyers to show up in that general area in the 5700s to the high 5680s. And then make another decision there. If we start knifing down because of, the many volatility events this week, maybe don't try to stand in front of it. Maybe try to get along with it until we get some consolidation that makes sense to long. But for the time being, that is how I'd kind of read this to start the week on ES. Do we find buyers in this general area all the way down to, it could get as low as 5720s. It could go make a new low from this little consolidation going back to early October. It could fall into, that area back in towards 5700. Maybe we boost back out. And then if you're back above 5730s, you might have a safe long for that range play or that traverse of value back up towards 5800s. You have all of this consolidation, this high volume edge here. It's very possible if you came down, you come back up, that's where we're going to continue to possibly chop for, the early part of this week. Let's jump over to NQ. Oh, and I haven't seen NQ yet. NQ looks a lot more violent than ES did on this gap down. Just a big red candle. Yeah, nice little gap down, making new lows, heading towards 20,000. But I think I said this on at the buzzer with Jay on Thursday. We were talking about this larger balance that NQ had been in, and we're still in it. It looks a little safer as a long in this general area around 20,000s than it does to long ES in some of these spots, right? I guess off these lows. Just because when you kind of zoom out and you go back to the end of September or even the middle of September, you have all of this volume that we've been trading and kind of balancing and chopping for weeks in. So once again, there's nothing wrong with this, like a safer long in the, the 20,000s down to probably 19,900, maybe take a stab long. But if we were to lose that, I am not trying to catch this. I would assume there's weakness in tech at that point. Maybe the semis are continuing to lead us a little bit lower. So I wouldn't be trying to long, and I'd be trying to get short. But there is a long, and I think we talked about this on Thursday. Like I said, at the buzzer, I was saying, I think it was my last little remark at the end of the show, was where we were trading going into, I guess, the Thursday overnight into the, well, I guess technically that'd be Friday's overnight. But we were down here on these lows right near 20,000. And I said, just as an FYI, as bearish as today was, and as much as I'm looking for continuation possibly tomorrow, please be aware that if we were to build volume here, this is the bottom of the range. And there's a very possible move that we could, if we start getting some volume off this lows or you consolidate here, that a move up was extremely possible. And you got that to the start of Friday. And then naturally we kind of slowly consolidated and chopped and dropped a little bit lower. But that is something to keep in mind in the early part of this week with NQ is this, whatever you want to call this, a 600 point balance between 19,900, this whole value area here where all the white is. That is just this balance that we've been in for weeks, and you're at the bottom of the range. So if you're Nick Dolby, you're probably looking to long in that general area in the event that we have a bullish move out of that area, and you could take it all the way back up. And as you guys saw, maybe it was Wednesday, we don't need a lot of information or a lot of data to move 800 points in a day on NQ. It's very possible. I think we moved about 600-700 in that session. So just be aware of that, how fast NQ can move, especially if you get some positive election moves or the market potentially likes the perspective of who may actually win the candidacy of president. We could get that bullish move up. I would not be shocked by it. So just be aware in the early part of this week as we're waiting for data or as polling starts coming in or results start coming in and states are being called, how fast on Tuesday night that we could make a move either direction. So that's what I'd be looking for. Like I said, a multi-week balance here in the NASDAQ. If we were to lose it, I'm a big fan of don't fade the initial move out of a break of balance. I think you're an idiot if you do it. It's just statistically incorrect. Once you break consolidation, you should be going along with that move. So you're Your break of that is probably like, I would not say trying longs below 19,900 is a good idea. Just looking at this these wicks going back to end of September is probably your last gas effort from buyers to step in and try to, stick save this if you're a hockey fan, where they could come in and, try to push us back up. But as you kind of break 19,900s and head into the eights, that is not where I'm trying to long it, because it could definitely drop another few hundred points before you find, the next bottom. But that also, 19,000, whatever, 800, 850s, you've got an older point of control going back weeks, but it gets slippery after that. And then you start talking, heading back to retest some of the August lows back towards 19,000, excuse me. Don't think we're going to get that unless it's a very poor reaction to the election or FOMC, but it does get a little slippery there. That's all I will say. And like I said, when you have a multi-week balance like that, I'm just not going to be the first person to try to then fade the break of that balance. So could be an interesting week in the indices. I don't have a good read. Like I said, this is a chaos week. This is a week where a lot could happen. Just knowing with everything on the docket for the early part of this week, it's a good week. Like I said, size down, maybe sit on your hands, let things develop a little bit. Tomorrow might be a snooze fest of a trading day. We'll have to see. But yeah, let's jump over to GC. Oops. So we finally got a sell-off, if you can call it that, or a more down week, or I guess you would call it like a neutral week, whatever, because we closed basically where we closed the previous week. And it's an area, like I said, I think I was talking last Sunday when we were talking about GC, is that I think we were even trading right around the all-time high when we opened. And I think I even said, like, I'm not interested in longing it up here. I'd much rather find an area that makes sense a little bit lower to long it. And the same thing is going to be true into this week. Obviously, you had another larger seller step in and push us down. The same thing was true Friday. You saw some weakness, but I'm still as bullish gold as ever. So it comes down to, hey, just like Dakota would say with the indices, where do we buy this? If you're just looking at last week's profile in itself, you had a pretty wide distribution, more outside move than we've had in a few, or I guess 2 weeks. So you have this lovely spot right here, 2750 psychological number, and this point of control for all of this volume that we've had for weeks, kind of sitting up here at the 2750s. So if you start to see volume build above that or above last week's point of control at 55s, probably a safe long, at least until the 70s, where you found these passive sellers going back to last week, as well as even Friday, that pushed us back down. So you might have a safe long there for about 20 points. But other than that, it's very possible, if you got some weakness, or with the election, with FOMC, with everything that can happen and could affect gold this week as well, with whatever the Fed's going to do, who knows? They could definitely have a more outside reaction in GC this week as well. So just knowing that, it is possible that we could come down and fill in some of this volume going back to the 2720s all the way down to probably 2710s is very possible. So if you start getting weakness, I guess below, pretty much below basically the low of last week, I'd say around the 2740s, 2735s. If you kind of lose basically the previous week's value area low on 35s, I may not be the first person to try to catch this. I'd probably wait to see if price, travels back towards 2700 before I'd try to long it again. I'd much rather come in when buyers have established themselves back into the auction, basically. And like I said, if we were to lose that, I would expect us to potentially go, retest the breakout once again of 2700, because we haven't done it since we, made that new all-time high. We consolidated, but we never came back and retested that big psychological number. And maybe we come in, like I said, fill in some of this volume back towards the 2710s. Yeah, Dan, I did just notice the spread in NQ looks lovely. So if you're trading this right now, Godspeed, guys. It's a little, NQ looks a little wonky, and the ladder in ES is real thin. I'm seeing like, 20s, 5s, 10s. Like, this is good luck. But yeah, on GC itself, like I said, if we were to break 35s, I do not be shocked if we go down another 20 points back towards 2710s. You probably have a safer long there if you were to lose 35s, but there's nothing wrong with seeing if buyers continue to establish in this area in the 40s or 50s and us build and maybe go make a new all-time high again this week. Much of it is going to depend on probably the talking feds and everything else that transpires with kind of the reaction to the election. One candidate or the other could swing gold positively or negatively. It's really dumb, but that could be an initial reaction just based on who's president or the reaction of who won the election, excuse me. So it's another week. I mean, all four of it we're going to talk about, guys. Everything could have a pretty volatile time, just given the events that are going to go on this week. With, oil, it's the same thing, and we'll talk about it in a second. But with everything going on with in the Middle East and with Iran and, everything, it's very possible, once again, you get another crazy volatile week in crude, which I think some of our crude traders probably have absolutely loved. But when you look at it, makes me sick to my stomach. I feel like I'm on a roller coaster because there's just indecision when all I want to do is probably buy crude, going back weeks. And I probably have been paid a few times, but I've also probably gotten my, my lunch taken just because of how chaotic it has moved on like the weekly time frame. Like looking on the 1 hours here, like just how much up and down, like it's been trending just about every single week with the exception of kind of the middle of October when we just consolidated within like a $2 range. But even now we gapped up in crude. I don't know exactly I know there was some news over the weekend or something with the conflict stuff that may have affected or may have been the kind of initial reaction that we're seeing so far. But we've come off that kind of initial gap up high that we touched right around 71, coming back here about 50 pips lower. That's actually crazy now that I'm looking at it. But looking at even last week's, I think we had talked about looking to, once again, I think we were talking about looking for longs actually in the 70s, the early part of last week. And then we sold off immediately, of course. That's why I don't trade crude. But since we kind of bottomed once again back towards 67s, you had a multi-week kind of area of point of controls going back there. I think we talked about this high volume edge down at 67s as well. So we may have found a temporary bottom there. We kind of went down. We may have retested these older lows down here. All of this volume that was sitting kind of that, like I said, that LVN we had at 67s. It seems like, at least for the time being, we may have, gotten the worst out of these lows. I would be more comfortable longing it now than I probably was trying to long 67s, in the early parts of last week. If you continue to see volume build in, 68s or in the high 67s, it's probably a safe long to continue. Like I said, I'm leaning more bullish in CL. Just looking at this and just looking at, the conflict in the Middle East, I would be leaning more towards looking for longs than trying to be somebody that's shorting crude. I just don't operate that way, I guess. But where we're trading right now, around 70-40s, I'd be wanting to see us continue to kind of hold in these mid 70s and hold this level for us to continue to maybe go back and retest in the 73s, at least back towards 71.50s. Kind of the highs of last week's is very possible if we can continue to kind of hold the mid 70s, build some volume. And do we make a trip back up there? Continue to, get a bullish reaction and push back towards 73.50s, which I think is that Hoag's level. Yes. It could even go a little higher. I think that's I would even lean maybe towards the 73.80s, 73.90s, this higher volume edge up there as well. If you were to get that bullish move in crude. But if you were to fall back, retest these lows, I'm not longing 67. If it were to fail again up here in the 70s, 72s and fall back towards 67s, I ain't longing it down there this time. I would expect it to go break these lows finally. Maybe it does. But yeah, I look at this every week, guys. Every week we talk about this and I say, I'm not touching this. So if you trade crude, Godspeed. As I said with trying to trade NQ with like a 2-point spread right now. That would be my read. Like I said, I'd be leaning more to get long in crude, but I've been saying that for weeks. I know we've had some chaotic moves the last month or two, but I'm still looking with any conflict. I'm looking to get long crude. I think it's a better play in my opinion. But yeah, I don't know how you can look at this and feel confident in any trade. At least on a weekly time frame, like I said, it's been trending more. So once it kind of gets a move in one direction, if you're kind of going with the flow of that week, you're probably pretty safe. But this is still just punch you in the face type price action if you get on the wrong side of it. Use tight stops. There is micro crude too, just to remind everybody, if you've been trying to trade crude and the minis are too much, there is MCL. That is a good thing to at least learn it on too. If you're not comfortable trading it or you wanted to start trading it, just given the volatility, you can trade it on micros and get a feel for how it moves. That would be my advice. This is just like I said with the indices. I would not be shocked by another volatile week in this asset class as well. So yes, coming off the lows of that gap down and building up volume again, pretty much towards, I guess, the lows of Friday around 52s. But let's jump over to earnings first. Oh, now I got to zoom out. That was my fault. I moved it in OBS so you guys could see the chart and took it away. Okay. So earnings this week, another gaggle of a lot of names that are going to be important, just depending on, you know, what you trade, how you trade. But the big ones to pay attention to, Palantir is going to be one of them. The big one I would say is going to be Tuesday after the close. What does SMCI do? What do they talk about? How are their earnings? Does it even matter at this point because they've sold off so much? Yeah, that is probably the one I'm really looking forward to the most. I'm sure that call is going to be gold, is all I will say. But you have Berkshire Hathaway actually reporting tomorrow morning as well. It's good to see what Papa Warren is thinking. Because if you guys have been living under a rock, he has not necessarily been buying the way he has in the past. He's pretty much been sitting on a cash pile that would make, you know, Elon Musk blush, I think. And he's just kind of been sitting on his hands. I think just waiting for the right opportunity. I don't know exactly his logic. I think he missed a little bit of a move up from when he started selling. I think he sold a ton of Apple. He sold a bunch of stuff. He sold B of A, which looks like the most genius move now. But curious to see what Berkshire's saying or what they talk about after they release earnings tomorrow morning. As we said, Supermicro. ARM is another one for the semis to pay attention to, and Qualcomm. Definitely could cause a positive or negative reaction in the semis, which is going to affect NVIDIA, which is going to affect the Mag 7, which is going to affect, you know, NQ, ES, as well as the Dow. If you were not paying attention at Friday's close, or you went on and, you know, kicked rocks, touched grass, and did something better with your Friday afternoon instead of, you know, reading market headlines, NVIDIA is being incorporated into the Dow. In fact, is replacing Intel. So the old grandfather of, I guess, microcomputing, whatever you want to call them these days, is being replaced by the new gen. So obviously the Dow is weighted significantly different than, or it's equal, or I guess it's more equal weighted, but than the S&P and the NASDAQ is. So it's not going to move the Dow the same way it moves the NASDAQ, but it is interesting to see that the Boomer Index is now becoming, you know, I guess, trying to become more hip to keep up with the broccoli-headed TikTok traders that, you know, are all selling courses and things. I can't even keep up anymore. But yeah, I think that is, sorry, that was a really dumb joke. But yeah, that's funny. I know Nick Dolby was very, very happy to see that. And I know the other 6 traders of the Dow at Topstep are probably just euphoric over the weekend at the thought of another large company being incorporated into their indice of choice for some reason. No, I know I give the Dow a lot of crap, and I always, you know, give people, I guess, yeah, I just give people trouble for trading it. But no, sometimes I look back at the Dow too, and you see it trades very cleanly compared to us getting just whipsawed in the NASDAQ. So it's just good to have a little fun with our 7 Dow traders at Topstep. But anyway, like I said, we have ARM on Wednesday as well, and Qualcomm. So important to kind of look there. And AppLovin. Yep, that is a company. That is a real organization. No one thought of that and thought of super bad, I guess. Okay. Gonna move forward. I know Rips is euphoric to report in his live trading on Wednesday before the bell. I know he's going to give us a play-by-play of Celsius earnings. I would not be shocked to see. No, I'm totally kidding. But Celsius does report on Wednesday as well. Arista Networks, you do have Fortinet and what was the other one? Datadog. So a few other more bellwethers in the tech sector, software, infrastructure as a service type space. So another one that could, not move the markets, but could add a little strength or weakness into the tech sectors, just based on how they report. So we'll have to see that as well. And then nothing too crazy. You had a few of the other names on Friday, but those are the big ones. Oh, and shout out to anybody that's still holding AMC calls. Good luck on Wednesday, I guess. But yeah, that's the earnings for this week. Obviously, I think a lot of these are going to get overshadowed by the larger events, especially SMCI. I know they report Tuesday, and it may matter at least in the initial reaction in the after hours. But then all eyes are going to go to the election. So I'm more so curious just to hear for the overall kind of accounting and fraud thing that's been out in there versus it actually moving the markets as much, just because everything becomes the election, and then, we're on to what the Fed's going to do on Thursday. So I know we talked about the two biggest events, but the other ones to keep an eye out for in the pre-market going into this week are going to be, we do have PMI after the bell on Tuesday. Why am I in Eastern? Am I in Eastern time? I don't know. It doesn't matter. I'll figure it out later. Looks like I am. No, I'm not, because it's crude. Yeah. Okay. So after the bell, you do have PMI as well as ISM services PMI. On Wednesday, you do a 30-year auction, which with what's going on in bond land could be important, could move the markets. Yeah, I think I'm on Eastern time for this for some reason. Why do my settings not save? That's annoying. Thursday, yes, it is, because Java's claims are at 8:30 here. So this is showing Eastern time, just FYI. We have initial Java's claims, as well as the elephant in the room being FOMC. So nothing else probably matters this week as much as the rate decision. I know we were still talking about another 50 basis point cut. We will see if we get a cut. We will see if we get a 25 basis point cut. Honestly, I have no idea, and I think the bond traders have no idea, which is why you're seeing such the rise in yields going into this week. It seems like nobody knows exactly what the Fed's going to do. So I don't have a good read on where we may go. They're probably still going to cut. If I was a betting man, I would still say they're going to cut. It's election week. I don't know. I'm assuming they're going to cut. I just have a weird gut feeling it may not be 50 basis points again, but we'll see. I could be wrong. I was wrong in September with the 50 basis point cut. So we'll see what it is going into Thursday. And then to round off our week, if you didn't need enough volatility, at 9 a.m. Central, you will have everyone's favorite market seizure, the Michigan's consumer sentiment, which for some reason always moves the market. So if you're in a trade Friday morning, just be aware. 30 minutes after the bell, you will get a nice news release that is likely to stop you out if you're in a trade. So just be aware. And then I'm assuming going into Friday and next week, we will have, once again, our favorite gaggle of Fed speak all back off of their blackout period and ready to piss us all off with, more speeches that just can't affect your trades. So we'll have to see. But I would say a lighter news week just because the other two events are going to move the markets more. I think these could relatively be non-events. I think jobless claims on Thursday before FOMC will matter for potentially their next meeting. And as we continue to watch the employment data for how they're guiding on cuts going forward is still always going to be important, but everything's going to be overshadowed this week by the larger events, I guess is what I'm saying. So yeah, that's the week. I'll figure out why this is an Eastern time for next Sunday. So, with it being election week, let's take a quick look at how gamma positioning is going into Monday. This is the screenshot from the Friday's close. So as as we had talked about the last few weeks, we are still seeing a pretty extreme positive gamma exposure to the north side. So all that net gamma still leading us a little bit higher towards 6,000. But when we look at the gross, so taking into account kind of the total chain on both sides, we're still kind of pinned, potentially between. Actually, I don't think this updated exactly, but no, something's wrong. But still, the larger gamma strikes are still going to be important. So the natural one at 5,800 as well as 5,900. But the elephant in the room that we've been talking about for weeks is still going to be at 6,000. If you get a very positive reaction to the election news, that is probably where we are going. I would expect to throw out last week if we get a good reaction or the market likes the candidate, or if we just start to get that bullish move up, I'm still saying 6,000 SPX is probably where we're headed. But given the volatility of last week, given the weakness in the semis, I would expect this to shift in the start of this week. And I know that this is saying we were trading a little higher. I don't know why it's doing that at Friday's close. So the data may not be perfectly accurate with this red line here, but the logic is the chain was still pretty spread across the board, or pretty balanced, I guess is a better word to use, at least for the next 100 to 200 points. So no surprise that we've been kind of consolidating for the last couple of weeks. I'm very curious to see how this shifts Monday as well as even Tuesday morning pre-election, just seeing how dealers and options traders are somewhat positioned going into election night. Just would like to see, just because if they're hedging for downside and the market loves the reaction of who wins, well, think about this. When the market opens and those hedges come off, where do we go? We go north. So when the market's well hedged, it just gets harder to move to the downside. And with the birth of zero DTE options, it means you don't need to hedge long time frames out. You can hedge for event volatility, which is what we've been seeing for the last year plus. So it's very possible this is all irrelevant, because all that's going to matter for the next couple of days is what the zero DTE guys are doing. So we'll continue to look at this, and I want to look at this again, like I said, tomorrow morning on Fast Markets. I'll take a peek, see if there's anything relevance or anything different that I'm really seeing here on the longer time frame chain like we're seeing now, as well as what the zero DTEs are saying for Monday going into Tuesday. So we'll have to get a peek, but like I said, it's pretty balanced. I can't imagine too many people are betting on a ton of downside outside of, like I said, those more zero DTE type hedges going into the election night and FOMC. So we'll take a peek back tomorrow, but nothing here that jumps out to make me think much different than I have the last couple of weeks, which is, the exposure is still to the top side. So if you get that bullish move finally, we know we've been seeing passive sellers continue to step in around the higher 5,800s. So we'll have to see. All right. Let's get to the questions here. And I know we've been talking about a lot of different things. So if you missed when I first said it earlier in the show, if you have some questions or anything you've been seeing or I've been talking about for the last 45 minutes that you have a question around, or anything else you want me to go over or talk through, I am happy to. So feel free to just throw it in the chat. We'll grab it and I will get to your question in a few minutes. But Nick, do you plan to trade ES or NQ with all the upcoming volatility this week? So I'm going into this week optimistic that I'm going to be trading ES. And I say that with the logic of the devil on one shoulder, the angel on the other. So the smart trader in me is saying, hey, Nick, you need to trade ES this week. Look for trades in ES. And that is my plan going into tomorrow. We'll see how that evolves throughout this week. It's funny. Majority of my scalps are always going to be on NQ. Majority of my larger trades, I know I caught it like an $8,000 NQ trade on Wednesday morning. But majority of my larger trades, so I would say, let's call it like $2 to $3 grand. They usually come from ES. My smaller, like 10 to 12, 20 point scalps are always on NQ. So I'm going to try to focus on catching a larger move with ES potentially this week than I am with NQ. I say that is my plan. Someone please remind me of that. If I start to stray away from that and looking for trades in NQ tomorrow morning, someone please just tell me hold me on, keep me honest and say, hey, I thought you were going to trade ES. Because sometimes I think we need that reminder. No, guys, that's what I recommend this week. If you're an NQ trader and you want to capture some points, I think there's going to be plenty of volatility to be had. So the safer trade would be to trade MES, build into a position, feel comfortable with it, see if you can catch a more larger outside move. But my logic is if you don't want to do that and you are usually a minis trader, this is a great week. If you trade 2 to 3 lots, let's say on NQ, maybe build into 15, 20 micros in over time. I'm not saying martingale your way to a positive trade. I am talking about building into a position that Dakota is very good at, which is actually, building into it as it's moving in your favor. So that would be the logic. There's nothing wrong with, building to 20, 30 micros in the same size position rather than throwing on a 3 lot and taking a, large stop out or hitting a maximum loss limit, given the volatility. So you just can take a smaller paper cut to get out and, do that this week is what I recommend. Sorry, just scrolled away from the question. Hey, Nick, do you place the session profile each time on your chart? Is there a way to plot multiple sessions automatically? So right now in TopsetX, there is not. The indicator that you can basically just auto-populate like a week is not available just yet. I hope it's coming soon. But the logic is I do this every Sunday with you guys. All I use is the, what is it called? The volume profile fixed range inside of TopsetX. You select it. It brings up the drawing tool and you basically just grab the amount of candles that you want for it to spit out a volume profile for you. So super easy. I just do it every Sunday for the weekly profile. It's the same thing I do that is done automatically for me inside of TradingView because they have the other indicator that I can select 1 month, 1 week, whatever. But it takes 10 seconds. You can do it this way, at least until the indicator is added. So it's also just a good way when you're doing your prep just to kind of see what it built and why it built it that way. So you kind of learn a little bit too versus it just auto-populating and spitting it out for you. But yeah, I do this every week and we talk about the previous week's distribution and where we go from here. So it's a good way to kind of incorporate where volume traded in the previous week as we're heading into this week. How do you use VWAP? I mean, you can use it a number of ways. It's volume weighted average price. So all it is a statistical average of the volume that was traded. And it basically will act like a kind of like a line that just follows. I mean, you can use it as something to lean into. You can use it as something that I do sometimes is, you can cover trades at VWAP. If you were in a short, in a long, and we start approaching VWAP, it's a good signal that it's an area that could act as some aspect of resistance or support. So maybe you lighten up your trade a little bit there. But there's a million ways to use it, trade off of it. Then you get into moving averages as well. And that can also be helpful in different trades and they function similar to the way VWAP does. But if you're curious on how to use it for a true strategy, I'm sure there's a ton of content out there for free on YouTube of traders smarter than I am that use VWAP. You can anchor it to certain places. You can use it from different time frames. For example, in MotiveWave, I use a 24-hour and an RTH, and then I see a weekly and a monthly too on my higher time frame charts. So it all can be done different ways. I know Brian Shannon's a really, really smart guy, and he's got a very good strategy around anchoring it certain ways. So there's a ton of good content on YouTube. I guess if you don't know how to function or don't know how it could fit into your strategy, I'd suggest starting there and then trying to, watch it on different time frames and seeing how price reacts when it gets too far away from VWAP and then approaches it again is where I would go, I guess. Hey, Nick, what are your visible range volume profile settings? I feel like we get this one every week. So I keep it pretty simple, guys. I keep the colors on here for you guys because it's harder for you to understand where value area lows are. I think I can visually kind of get an idea of the range. But if you're still learning how to trade using volume profile, I would suggest keeping your value areas your value area high, low as one color, and then your value area as a different color so that you can physically see where that break in, the 70-30 rule that I use is in volume. But on ES, I keep it as 1 point, so 4 ticks, and I do ticks, not number of rows. So super simple. And it's the same thing on my visible range. I don't change anything. On my motive wave charts, they're all one color just because I can find the value areas at different time frames. And the more you guys get comfortable with volume profile, you don't need the red lines for point of control, and you can get a good idea of where you may want to interact based on volume profile without needing it to be different colors. You can kind of get a perspective. So keep using it, keep trading. And if you like this style, I know I've been trying to incorporate it into the show. So if it's working for you, or you like some of these levels that it can give you, keep learning it. There's a ton of smarter people than me that are masters of how to use volume profile, and they're a lot smarter than I am. So once again, just like we said with VWAP, there's a ton of good content from good traders out there that have spent a lot more time than I have actually breaking this down into a real concept and a real strategy behind using it. But there's a ton of ways to use the same information. It's just a different way to visualize volume in the auction. I like to use it as a histogram personally and look at it that way. Is there times of the day to trade crude? I am not the best person to ask this question. If you're going to hang around, Dakota's probably a better person to ask that. He trades crude more than I do. D, if you are somebody in the UK or in Europe, she is probably the best person at Topstep I can think of that you might ask it, because she trades crude so much and she's a fantastic crude trader. So she may be a better person to ask the next time she's on TopsetTV, as far as the better times of day, maybe more volatile times. Obviously you have after the open, but I'm sure there's a time, you know, in the overnight, as well as depending on your, you know, time in the world that may work better for you. So she's a good person to ask also, because she operates on a different time than I think majority of you in the chat do, just because it's so late in the UK and Europe right now anyway. So like I said, she's probably a better person to ask. Dakota would be, because they actually trade crude. Well, I mean, I don't trade crude. So yeah, just not the best person to answer that one. Someone was asking what this website is. This is TraderAid. It started by a mentor of mine, but I'm using just the, you know, his models to visualize the gamma data here. There's a ton of resources out there. It's a paid service, guys. They're all, most of them are paid services. So if you're an options trader, I'd highly recommend, you should probably be looking in some way at gamma data. But TraderAid is just started by a mentor of mine, and he built some really cool models that are easy to understand and read. So that's why I show them to you guys. There's a ton of them out there. You can look at GexBot, you can look at Spot Gamma. There's a million options data providers out there. They all usually have a cost associated to them. But if you are an options trader, you probably should be looking at some aspect of this data, flow data for single stocks as well. But this is just one that I use because it's simple, because I am not an options trader day in and day out. But I enjoy looking at some aspect of the information without getting too in the weeds. I don't need this to be updating for me in real time. So this model is perfect for me. I just need to know where the big pools of liquidity are and how they shift intraday on like a 0 DTE perspective. But check them out. There's a ton out there. They're all good resources. There's a ton of information. If you don't know much about Gamma, same thing. Like I said, for VWAP and volume profile and everything else, there's so much free information on YouTube, guys, from some good traders, some bad traders, but some people that really understand this stuff have built models, have offered their time, put good videos out. So just do some research, see what you can find. Like I said, there's a ton of good websites out there. Just some of them for me are like information paralysis. It's just too much data that I don't need to take a trade that has a 1 minute time frame on NQ. So that's my logic. I just like to give you guys an idea of where larger institutional type options positioning is leaning one direction or the other. It's not to formulate a bias or a direction, but to just tell you there's a lot of exposure to the upside. That's kind of the logic with this data. General rule of thumb for trading futures during election week. Probably don't. No, the rule of thumb would be treat it like you treat any other highly volatile time in the markets. Size down, use micros, see profit, take profit type stuff. If you can catch a big move, congratulations, don't be greedy. That would be my general rule of thumb for this week, just like I would any other larger move expected type week. Is be prepared for anything. Do not be greedy. Use your stops. Stick to your stops. Do not martingale, and lock it up if you're green. Don't be if you're green going into 1 p.m. on Thursday. you better keep it that way. I would not tell you to trade FOMC, or if you're trying to dig yourself out of a hole with FOMC, it's better to come back tomorrow, man. So that's my rule of thumb. Election week, don't trade Thursday overnight unless you want to be whipsawed or you know what you're doing. Just like you would treat Tuesday night's overnight session with Coach Dakota and me on slow markets. Treat that like you would any news release. Anything can happen at any time is what I would say. Do you also trade options? I do. So I got away last year in my personal accounts from swing trading with micros, and I started swing trading a little more with options. I haven't been doing it for the last, I would say, 2 months. I think last earnings season was the last time I did it. I went long, like right after I think Microsoft reported in some options in the after hours, and I held them for the next day. I don't do it too much. I think Dakota does a lot more than I do, but I got away from it. It's how I started day trading, was with options, and I wasn't very good at it. And then I found futures. And I'm actually good at this. But I still do trade it a little bit. When I was not like day trading every day and doing the show and other things, I was selling options against shares that I owned more than I was trading options, if that makes any sense. So if you have never traded options, I don't recommend starting it. There's a reason it was more of an institutional positioning type asset class. Get an understanding of what you're trading, how it moves, understand the Greeks. If you've never traded options before, same thing. Do some research, understand what you are actually trading. But it's a good way to make money very quickly and without a ton of leverage, and your risk can be capped at times if you're not selling options like an idiot, or selling naked options rather. Nobody likes to be naked when you're selling options. So know what you're doing if you're going to trade options, just because it's just like futures. The leverage can kill you slowly. And with the emergence of zero DTEs, it's a great way to lose money very, very quickly. So be careful if you're trading options. Why is Buffett not investing his $300 billion cash position? What does he know? I don't know. It's a good question. Maybe we'll get some clarity tomorrow morning when Berkshire reports. I don't know how much he's going to be talking or what's going to happen after they report, but I am in as much of the dark as you are. I would imagine he sees something he doesn't like. I mean, the guy is who he is for a reason. He might just be waiting for lower prices. He may just feel like the market has run up too far, too fast, and is just waiting for price to return. He's king of buying the dip and holding. So there's a reason he's not holding right now. He is in certain positions, but sitting on cash, I would imagine, to deploy at a certain time. And that time clearly is not now before the election. Maybe because of the uncertainty. Maybe he doesn't like, everything he saw with the Fed raising rates and cutting rates, and now he's just kind of waiting for the dust to settle. I don't know. We'll find out. How do you use Topstep daily levels? So you can go to your indicators list and type in Topstep levels, and you can select what you want. But all this is, guys, is market generated information, with the exception of Hoag's weekly kickoff low and the weekly kickoff high, which I think is his little aspect of secret sauce that he hasn't quite alluded to exactly how he plots them, but damn, are they good. His levels a lot of the time are in conjunction with mine, so I must be doing something right as far as targets for the larger move. If you were to get a break of some of these balance areas, he's usually dead on, and we usually hit at least one of them each week. He's pretty damn accurate with some of these. So take them seriously when he puts them out for free, guys. It's an awesome free indicator to have on here. And I am one of the biggest market generated information, proponents, I think, as a trader. It's just free information that the market gives you, and this indicator will plot them for you. So whether it's the previous week's high, previous week's low, the point of control, this is all just information from the auction, and you can use as much or as little of these as you want. And there's also different ways to visualize it too. I don't necessarily need last week's high and last week's low, because I can see it on volume profile and other things. So I remove some of them, but the value areas are interesting just to have in TopsetX because I don't look at the previous week's volume profile, like right next to my 5-minute candles when I'm on an execution chart. So you can use these to, lean into, like if you're at Hoag's weekly kickoff low, let's say, and you see buyers stepping in, you could lean into that to try along. Same thing at his weekly kickoff high. Like if you start to see passive sellers come in, like we've been seeing at 5900s, you could lean into it for a short and maybe you cover at last week's points of control back at 5870s. So there's just ways to incorporate market generated information to, find trading opportunities. They are just levels to kind of guide your decision making is how I would think of them. It doesn't tell you to long here, short here. You need to interpret what price action tells you when you actually get to that level. But there's a very good method to the madness of using market generated information because it's exactly that. It's information that was left behind by the markets. And when we interact with some of these levels, Jay likes to say that level meant something to someone. And when you kind of zoom out and look at these on, other time frames or whatever, and you coincide with, okay, well, the value area low was where we had a big reversal and, some aspect of the price action from the previous week. That would kind of make sense because it was a lower area of interest in the auction. So there was not a lot of sellers, let's say, present at a value area low, and then price returned back to a higher area of volume. That is how you can kind of think of them. It just plots that information, and it's up to you to interpret what to do with it and how to trade off of it. But that's all it is. I use MGI to guide majority of my trades or keep me out of trades. So I would highly recommend, if you don't know what all these mean, start to understand some of them. And then see if you can incorporate them in your training and then use them as confluence. So if we return to a value area low from the previous week and VWAP is kind of trading right around there and you start to see us consolidate, maybe chop a little bit in that spot, that could be an indication of a potential long opportunity because we're seeing buyers defending that area. VWAP is acting as support and price came all the way down to that. And what that MGI level was a value area low. So pretty good indication that it's an area that you could see a potential reversal off of. You guys see me take a lot of reversal type trades rather than breakout type trades. It's because I use MGI to kind of guide that with confluence from other things that I look at in price action. So that is how you can kind of use it. If in a drawdown, would you ever consider dropping your risk reward instead of 1 to 2, maybe using a 1 to 1? I mean, it really depends on how much of a sample size you consider a drawdown. If you're talking a month plus and you haven't changed anything about your strategy and your strategy has proven to work in the past, you could be in a statistical anomaly type situation where it's just, hey, it's bad luck and you're on the wrong side of your own statistics of hitting trades. Let's say 30, like someone like Dakota that hits 30 to 40% of his trades with a high risk reward. There's going to be spells where he hits that 70% trade after trade after trade after trade. And that's just statistics. It can work that way. The odds are low, but it can work that way. So it really depends on, how long the drawdown is, because the longer it goes too, I would now question the strategy you're using and if it really was that effective. I'm not telling you to scrap it by any means, but rather than changing your risk reward, I would tell you to size down and prove your strategy out without taking as big of a hit. Because then in theory, you're still proving, no, I know what I'm doing. And it was statistics and my trades still are playing out. My entries are still good. My risk reward is still good. All I'm changing now is the amount of drawdown I'm taking just because I'm trying to prove it out. If you're in a drawdown, sometimes you need to size down and have success rather than, I would say, scrap everything you're doing and try something different. It sometimes is just like getting the confidence back, because I think sometimes when you get in a drawdown too, you get a little trigger shy to even enter trades. And then you might manage them because you don't want to take any more hits. So you may manage them by taking profit too soon. So now your 1 to 2 risk reward goes 1 to 1.5, 1 to 1.2, because you're taking profit too soon because you're afraid of it going red on you. So It really depends, I guess is what I'm saying. Without knowing like the sample size and, you know, your statistics and things like that, it's hard. So I would recommend, rather than changing your risk reward, just sizing down and seeing if it's still valid. Like seeing if, you know, if it still works, if your trade thesis is still accurate, if your strategy is still accurate, before I would say, you know, because at the end of the day, when you change your risk reward, you are in some aspect of changing the strategy that may have gotten you there in the first place. But like I said, it depends on how long the drawdown is. If you're talking a day or two, that's statistics. I wouldn't worry about it. Keep doing what you're doing. Or someone in the chat wisely said, go back in the sim, hit on the practice account. And rather than taking, you know, risks, just get confidence back in what you're doing every day. That is a good answer too. All right. So that is all the questions that popped up. So why'd the mic go all the way up there? Let's recap real quick before I let y'all out of here. So we talked about the early part of this week. I am going to be using kind of the 5830s, let's call it this, like 7-point range around 5830s, this high volume edge here. Sorry, it looked better when I zoomed out. There we go. Like I said, this could go all the way up to kind of 35s even, the more I look at this. But that 30 spot is going to be interesting for me in the early part of this week, that I'd be curious to see, does price return to, and then do we make a decision there? If it's bullish, and this is, let's say, Tuesday night, I am probably not looking to fade anything above this price going forward until at least we get back towards 5900s. I'm going to be using that as my pivot. I would expect sellers to honestly step in there. I am basing this off of, like I said, this high volume little edge we have right here around 35s, and then also kind of retesting this as that initial breakout spot that we had when we made that new all-time high 5900s going back to early October. We consolidated and then we took off, and then that acted as support pretty much for the last few weeks. So I would expect that to continue. And I'm basing that off some of these wicks from 2 weeks ago, as well as kind of this initial low that we had in the early part of last week as well. So I would not be shocked to see price return here, or what happens after that. I don't know. We'll have to wait and see. It's going to be a volatile week. Elections and FOMC. What a week. I hope everyone is prepared for the potential violence that may come in the trading week. Please do be smart this week, guys. Use stops, size down. If you're an NQ trader and you want to get some action, you take a couple stop outs, maybe move to ES this week would be my guidance, my advice. You know, there's probably going to be a lot of points to be had this week. So do not feel the need to size up. Do not feel like you're the big strong man and you're going to trade minis and then you get whipsawed and blow XFAs, blow combines because you're trying to pass them in one trade. This is not the week for it. Yes, you can do it with all of this volatility potentially, but it's still a week for learning. It's, if you've never traded volatility before and you've usually sat on your hands, you know, it's a good week to play around with it in a practice account, play around with it with micros, see if you can, you know, how it is. If you've been itching to kind of trade a more volatile market at times, this is a week that, you know, you could get a little practice or get some learning in it, I guess is what I'm saying. So like I said, plenty of points to be had. Please do be careful. Please do be smart this week. We should have some fun. I'm going to be on fast markets 3 days this week. If I do not end up in the delivery room, we're not due technically until next week. So we'll see what happens with Nick becoming a dad this week. But if I am not at the hospital, you will see me tomorrow morning on fast markets, Tuesday night with Coach Dakota on slow markets, Wednesday on fast markets, and I'm going to be joining Anne Marie on Thursday as well for fast markets, provided I am not having a baby. So we'll see. But that's my prep. That's how I'm thinking about it. Oh, there was one more. I don't have a pivot for NQ because it's in an insane asylum some weeks, but I would be looking, same thing, this multi-week consolidation here, these lows that we kind of had, these couple wicks right here, and this low volume edge, this 300 spot up to probably 350s. I would be interested to see, do we find sellers there or do we kind of just blow through it because that's an area I'm kind of watching to see, do you get a reoffer? Do you see sellers reoffer in that spot? So no NQ pivot because it's you need a padded room sometimes to trade it on a week like this. And I know that's in the dead center of this balance. So that's also why I'm kind of saying that 300 spot is interesting. This low volume edge, that kind of consolidation we had, the initial sell-off went back up. Just an area I'm watching. Not a pivot, not a trade idea, not long or short, just something to keep in mind. Middle of that kind of multi-week balance. But that's maybe where you might find some sellers stepping back in that, like I said, 350s to 300 spot. So that's my prep. That's the week. Let's go kill it. Let's make some money this week. Let's have some fun. Let's be safe. Let's not do anything too stupid. I know it's hard for me sometimes, and I know it's hard for some of us, but let's just have a good week, guys. Thank you all for tuning in. Hope everyone had a good time. Hope everyone learned something. I know that's always a challenge for everybody too sometimes. But I hope you guys enjoyed this show. If you can't get enough of TopstepTV, please tune in about 90 minutes. Coach Dakota will be here to give you his perspective going into election week as well. So please join him for slow markets. Listen to the #1 trader at Topstep. That is not necessarily just an opinion. That is a statement of fact. He is a better trader than I am, but I do learn something from him every time I watch him trade with me on fast markets. So yeah, go learn something from him as well. Have a good night. Everybody have a wonderful trading week, and I will see you all bright and early on fast markets.